Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, I can hear you loud and clear. How are we doing today? Welcome back at the Buzzers for
Welcome.
another exciting day in trading.
Yes, it was. Yes, it was. Welcome back to all of our buzzer beaters. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience and some knowledge and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat, our audience. How did I trade SJR? Traded all right. I actually hide this up here, but made 316 bucks today in this Topstep XFA. Made about another 800 in a S&P trade, but that's not really doesn't really tell me how I traded, right? That tells me what the result is. And I traded, I think, what I could have traded, right? We talk about it all the time, but shout out to Andre, who's been out on vacation. Driving the segment, fast markets is my best trading time. Right? It's where I do my best trading. It's when the markets have the most momentum and volatility. But when you're driving a segment, and I don't know if it seems like a lot or not, but for me, trading takes a lot of focus, right? So the fact that I'm up on the day without being able to trade during my best trading time for the day, and my schedule isn't always like that. Later in the week, I'm going to be able to trade during that time. I think I did pretty good. I think I did pretty good for the day, but there was some really nice movement. But the one thing, I think it's good to say I'm not making any excuses, right? I love what I do. Love being able to drive the segment, but I know that trading distracted, even though I saw clean movements today, I don't know if I would have been able to execute it with the attention focused on driving the show. So it's a long-winded way of saying I had a good day, but yeah, so I saw some pretty nice market movement. And our shout out to the traders that took advantage of it during the fast market segment. How did you trade, Coach Paul? How was your day?
I had a good day. I followed my rules. I picked up $400 trading micros. I was not with that announcement pending. I was going to trade small. I missed some opportunities, but you, you can't trade them all. But I want to throw a shout out to you. Driving that segment
Yeah,
in trading is that's not an easy thing. You got so I would say you had a great day considering the distractions. So
I appreciate that, Coach Paul.
yeah, and I like another thing you said is you might have made money today and not traded well.
Correct.
You could lose money today and traded terribly.
Yeah,
So following your rules, your setups, being patient, not over leveraging. That's where discipline meets destiny. So and it was a wild day. These are the kind of days with undisciplined trading. You can drop your combine or blow your XFA. So
absolutely.
great trading, Coach.
Thank you. You too as well, Coach Paul. Let us all know in the chat how you guys did today. See, Matt Grubb says green, all 3 XFAs. Nice job there. Coach Hoop talking about the gold silver spread. When it unwinds, it will be wicked. We'll talk about that. We saw silver make all-time highs. Genius Monkey, Coach Jay and Paul, I felt I disrespected both of you today. Despite all warnings yesterday, I did stupid things. I was down 2,600. Thankfully, I finished 300, but it was horrible. And there you go, right? You made money on the day, but you know that maybe you probably did some things you shouldn't do. And that's where to take notes from. Right? A lot of traders will just say, well, I was up on the day, and justify the ends don't justify the means, right? And if you had to draw down 2,600 to get to $300, maybe that's within your risk budget, right? Let's say your risk budget was $4,000 for the day, and you continue to trade. then that's fine, right? You didn't hit your risk allotment, so you continue to trade and see setups. But if you say, you did some stupid things, I would assume that $2,600 is probably not in your risk budget, right? And then you did some things to try to make it up. So where's the room to adjust? Uh, it's not even allowing yourself to get to that drawdown point. But nice job recovering. Heard a pretty smart guy one day say, "Rules can be broken, but principles can't." And what are the
Oh, so
principles for your
true.
market for principles for your account? Keep those in mind.
And that's what you have to follow principles.
Absolutely. Let's get into the markets. We got 36 different markets we can trade with Topstep accounts. And today, to the downside, we had crude oil down 1.64%. RBOB gasoline futures up 1.96%. Sorry, these are all down. Crude down 1.64. RBOB down 1.96. And natural gas, our biggest percentage mover to the downside, down 9.71%. That pullback we were talking about in natural gas, we finally got it. Uh, and it was a pretty heavy one. We were talking about potentially filling this gap a couple of days ago, and looks like we did it twice now. Really nice move
That's
there.
the opportunity I missed.
That's a nice trade there. That is a nice trade there in natural gas. I don't remember exactly what we were talking about. I think it was maybe uh, lost my moving averages. Let's put these back on here. Gotta have the moving averages, at least the 200.
It's one of them, the white line.
At least that one, right? At a minimum, we have to have that one. Yeah, this market
Shoot.
got under the
Oh,
200 on the
straight.
30. Yeah, wow, look at that.
What time did that start?
The selling
Yeah,
six.
7 o'clock.
si- This candle right here is 6:30 Eastern time.
Okay.
This is 7 Central. We're already down here. So yeah, right around that 7 to 8 a.m. Eastern time is where that selling starts to come in. And we've talked about this a couple of times this week. It feels like, but if you were awake during that time, I was awake. I was taking care of the dog, making sure he ate expensive breakfast.
That's that's nice of you to make sure he ate.
Right.
Um,
Uh,
well, boy, there was a lot of movement today. Where do you want to start, Coach?
let's take a look at what happened to the upside. We had micro Bitcoin up 3.33% on the day, micro Ethereum up 5.48% on the day, and silver, our biggest percentage mover to the upside, making new all-time highs, up 7.3% on the day. Another 7% day, 8% day in silver. We're talking about $100. And I was talking to Dakota a little bit earlier this week about the reality of $100, not inevitably, but this week. And every day we get a 7 to 8% day, it's more and more of a reality. So we will see silver making new all-time highs. We had crude oil, we talked about, down 1.68%. The S&P down 0.56%. Gold up 0.73%, also making new all-time highs. And the NASDAQ down 1.07% on the day. Let's start with the equities. They were moving today. Uh, take a look at the daily. We are still in this range. We need to start looking at this like we started to look at that gold range. It's been 72 calendar days, 52 trading days since we've made an all-time high in the Nasdaq futures. What are you seeing here on the daily, Coach Ball?
And look at the average true range also is coming in. We're finding a lot of balance up here. Still solid. I think we hit the 20 and a 50-day moving average, which has been braiding
We did.
with a big move down. And we had short covering on the close to finish above both. Still, trend hasn't changed. It looked like it was going to collapse earlier today, but short covering on in the last hour left that wick still in an uptrend. Or should I say sideways trend?
Yeah, this is a consolidation range if I've ever seen one. There are no convinced buyers above 26,000s right now in the Nasdaq. I don't know what it's going to do. We did get some numbers out earlier today. Forgot to talk about these, but we got retail sales came in at 0.6%. Forecast was 0.5%. We got PPI, Producer Price Index, coming in at 2.8% year over year. Forecast was 2.7. I know some people were waiting for inflation data to maybe be the catalyst to get the Nasdaq out of this range, but we're stuck here. Decent enough range to trade though, right? Daily ATR is still 345 points. Today's range 505 points high to low. So there was definitely some opportunity in there, but the October 10th candle is still relevant. And we closed right at the high of it today, 25,635 and a quarter. We're trading 25,621 right now. This candle's still relevant. We see a bunch of wicks on the dailies right at that high. And like you said, Coach Paul, some short covering towards the end of the day. But some price acceptance back inside this candle. You know, Coach Vince was short today looking for 25.12 as a target, which is right around 50% of this candle. I don't hate that target as on a higher time frame. It's 2.5% away, and we saw the Nasdaq almost down 2% today. You know, on a higher time frame, it definitely isn't an uptrend, but this is what's going on here. We've seen the S&P, the Dow, and the Russell make new all-time highs.
You just mentioned a Russell. We'll show that in a little bit, but the tale of two different markets.
For sure. Let's
So let's watch from last night.
taking a look at the 30-minute chart from last night. Another one where, we had some data coming out this morning. So are we really going to see a trending market overnight? Last night was pretty quiet here in the Nasdaq. I'm going to stop doing this here. Let's just fix this.
Wow, you're a wizard at this. That would take me 5 minutes.
Can you tell me? Can you tell I've done this once or twice?
You,
All right, there we go. Now that's better. Okay. So last night's open, pretty consolidated overnight range, which is to be expected. But we did see some selling start to come in that London session early on. I was actually surprised to wake up and kind of see the Nasdaq down where it was before the PPI print, which you can barely see on this chart. Kind of hard to tell what PPI was, right? CPI had much of a bigger effect on the market yesterday. The PPI print is right here, and another one where we frame out the candle and see the market's response to it there. But just a really nice downtrend. Held. This is a 9 moving average. Got to change that to a 2. Shout out to all of our 9 moving average traders there. But we traded price and volume below that 200 moving average on the 30-minute. It's just a really nice sell-off day. What are you seeing here, Coach Paul, on the 30?
well, the high last night was the pivot of the day. And by the way, starting Monday, we'll show the pivots on this show. And I was surprised at the velocity of the break considering PPI number. But bottom line was when we closed above 200, under the 200. I think that was in European time.
Yep, right here.
Yeah. And we just never, we came back and touched it. I think did a tick, if I remember right, which was
50%.
VWAP. That was quite a sign. And it was a serious break there. It went past 3 levels of support where he was under the 3rd level of support. Still, I think the that rally was mostly short covering because that opening, we opened the half hour right around VWAP underneath the 200, and the selling came hard and fast.
Yes, it did. Let's take a look at the 3-minute here. Look at the open. And here we go. Right. We opened up New York session open here. We got the PPI print here. And you could even look at the volume, right? That 3-minute candle maybe still relevant. Actually, for what we talked about yesterday, attaching a VWAP to the PPI print, we did get some urgency on that print there. Came back tagged right around 50% of that PPI candle. So some of the things that we frame out all the time, of course, we get to see it in hindsight, but the flow was already to the downside. That PPI number comes out, knee-jerk reaction is to the downside as well, and then the flow continues. This is a really nice opportunity to get in some shorts here. I think some of the scalps that I took were when we got back inside this opening range, and we traded above the New York session VWAP, but staying below the full session VWAP and trending lower. These wicks here look like failure for buyers to trade back above this level or price acceptance back inside this opening range. Really nice flow to the downside here.
Yeah. And notice that red line.
Yep.
That session VWAP. We never closed above until late in the day where we had the short covering. So there was a great scalp when we went back to session VWAP. Didn't we didn't tag it. We came really close, but when we closed below that candle, when we got it, we found more selling. Actually, took a scalp there on the S&P. It was very similar. I frame out that 3-minute when we get close and see if it failed, and it failed. But again, the selling was a little overdone. And remember, down in that area, it's the 20-day and the 50-day moving average.
Correct.
Now, if this was panic selling by institutions who don't day trade, by the way, then to me, to get bearish longer term, we would have finished underneath that, and we didn't. So, little overdone to the downside. Nice short covering rally. What? Not much more to say than that.
Right. Really nice selling there in the NASDAQ and going to open the session at a very interesting spot, right? We're right at the high of that October 10th candle, which has been so relevant. Getting some news from the president right now. In near future, Trump may impose broader tariffs on imports of semiconductors and their derivative products. Trump also imposed a 25% tariff on certain advanced computing chips, such as the NVIDIA H200, which is the one that they're selling to China, and AMD MI325X. So hearing some news about chips from NVIDIA and AMD. Yeah, not good for the NASDAQ. We also had, the Supreme Court opinion on tariffs supposed to be out today. It was on the schedule tentatively. It was on the schedule last Friday. And it was postponed to today, where then again it was postponed again. So this is, to me, further reason why, as a day trader, I'm going to trade the chart that's in front of me, because Supreme Court is putting things on the calendar and moving it. I'm just going to read the charts, because the charts are going to tell us what the market's response is, and that's ultimately what we get paid for, right? The Supreme Court can make a decision. The market's going to respond to that decision. My job is to respond to the market's response to that decision. So we're kind of further down the ladder or down the line as far as the information goes, but it will show. The one thing it will show is in the chart patterns. It'll show in the volume. It'll show in the price action, and that's what we as day traders should be focused on, in my opinion. So we will see it there. It's good to know, maybe, but I can't trade off of any of that information. S&P very similar to the Nasdaq today, so we don't have to do a deep dive in that. I just do want to go out to the daily and frame out that October 10th candle. The S&P is much stronger than the Nasdaq. The 20 and the 50 moving averages on the daily still have some separation, and that 20 moving average is the support, but we can see them trending higher. Right in the Nasdaq, these lines are wrapped around each other, and we're trading back inside this October 10th candle. In the S&P, we're definitely holding up a lot better. We just made all-time highs yesterday. Let's take a look at the Russell, which made all-time highs yesterday, and maybe where the money is going as far as equities go. You know, buying the companies that are in the Russell instead of the tech-heavy Nasdaq. We've heard Jack say that the market breadth is just a lot better than it has been, right? Where we're not so heavily tech focused, which I think is a good thing. If Nvidia had any bad news last year, Coach Paul, it was it.
Well, we've been watching this, and it says a rotation is risk off. Now, remember, institutions, unlike day traders, have to buy. It's in their um, it's what they do. You buy when you put a buy when you invest in a 401k. There's no choice of a short stock portfolio. So that money streams in, and now it's going into the safer bet, which is the Russell. 2,000 stocks, a little less volatile. And really I like trading the Russell. I didn't trade it today because I caught an early short in the NASDAQ, but it's just, there you go. But there's the evidence.
The Russell was a kind of a tough one to trade early. It started to find some direction towards the middle later in the day, but that first 4 hours or so in the Russell was a difficult trade. But we can see it on the 30-minute, holding above that 200 moving average and continuing to trade higher, back inside that CPI candle from yesterday, right at 50% of it right now. And taking a look at the Dow very similar today to the S&P and the Nasdaq. Came up and tagged that opening print a couple of times, that opening candle. Tough day in the Dow as well. A lot of overlap in these candles. Not as clean as the price action we were seeing in the S&P and the Dow, S&P and the Nasdaq today. Let's take a look at the metals. Move over to the metals markets. Looking at gold on a daily, made a new all-time high last night, 46.50 and a half. New all-time high in gold here. We had that big sell-off candle December 29th, finally closed above it on Monday. Yesterday, we held it as a support, and today we didn't even test it, making new all-time highs here. What are you seeing on the daily, Coach Paul?
Well, still a very bullish chart. I do have a flair for the obvious, and I'm going to show it here. But one concern is the ranges.
Okay.
It's not breaking out well. You know what I mean? I mean, these are small ranges yesterday and today.
Right.
On this daily, it so I would like to see it close above that first time we got into the all-time highs, and it's stopped. The buying stops there, and then the range is small. So that's a little of a red flag to me. It's almost been too easy to buy gold. Now, you see that? I expect a little more from it. Doesn't mean it can't happen, but right here, it's kind of sputtering. Even though it's making new high, we've seen this. It makes it. Yesterday? How many contracts did we go over where it made new highs and then sold off? New contract highs sold off.
Yep.
So, just I mean, still bullish, but a little bit of concern.
Yeah. The range is definitely contracting a little bit here. Today's range about $60 high to low, $57, where the daily ATR is 85. We're still seeing more than average volume come in. but the range is definitely contracting for sure. Maybe we need another pullback to convince buyers to step back in here. You know, it's kind of hard to buy something at all-time highs, especially the closer we get
Yeah.
to 5,000 here uh, in gold.
Oh,
Still a nice trade last night. We did have some urgency on the open last night. Here's that first 30-minute candle. Within 2 candles, we were leaving the range. Volume was leaving the range as well. In a decent trade here. Let's say you waited for this long, close up there. Your risk goes on the other side of the range. You didn't get a 2-to-1, but you got a pretty nice trade here. And this is 23 points of risk. So maybe trading the micros, and that is a lot of risk. But, do I forego any profits, maybe even a 1-to-1 with 23 points if I take this trade this way to say, you know what? No, I should take a 2-to-1. Personally, I'm not going to do that. If I get a 1-to-1 and that one is 23 points, I'm probably taking something off the table. At least if I'm trading multiples, probably maybe taking one off there. That's a ton of risk. I'd probably honestly take that trade on a shorter time frame, maybe something like a 3-minute candle. But nice trade there. But again, starting to get heavy. Coach Paul uses that analogy all the time of getting to the gym and you are lifting weights you've never lifted before. That's what this looks like right now, right? You could try and
yeah.
it's pushed a couple times, but sometimes you got to re-rack those weights. Get a little stronger before you can continue to lift. And it happened right at a psych level, minor psych level, 4650. Why am I calling that a psych level? Just because it's a round number, ends in a 0, and it's a 50, 50s, hundreds, things like that. Seeing some nice rejection up there. But this is still extremely strong to me.
Hey, coach, put a volume profile on that from the opening, Globex opening. Look what happened. Watch when we hit the point of control, which was it was like 5 o'clock in the morning. We bring that volume point of control, and it flattened out.
Up here. Yeah, so the
Yeah,
volume point of control was stair stepping the entire overnight session. Took a little while, consolidated, and then jumped up again. And that was where it sat for the rest of the day, which means price acceptance up here, right? Maybe some sellers up here. Uh, Somebody on the offer. I wasn't really watching the book in gold, but price acceptance up here.
price acceptance, and then we got heavy volume.
Right.
I'll duck. Oh, there it is.
Yeah, this
Um,
candle right here.
yeah, which stopped it. We went back, we held it, but key point is it rallied. It looked like it was going to go to 5,000 today
Right.
at one point. But using the volume point of control, once it reached there, what do? We found balance, and it stuttered. And this is, to me, the little profit taking. And this is my concern: is that these ranges are getting smaller and smaller at all-time highs. It's like the buying is saturated. Don't take me wrong. This is still a bullish one, but it feels like it kind of needs a little flush.
Yeah, I would
Um,
agree. That 200 moving average right here looks like a nice spot to land. 45.72 right now. It's going to continue to trend higher as the market sits up here. That looks like it's been a couple days since we've tested it. So maybe that would be our pullback area. That'd be a nice short. It's tough to short the metals, but it's about a 1% move to the downside right now. A little over 1% move to the downside. Uh, Anything else you got on gold?
that's it.
Take a look at silver here. A little bit of a different story. On the daily, what can you say? It's going up. We closed above this margin call candle. We'll call it that in silver. We closed above that Monday. Yesterday, we tested it as a support. And today, didn't even get back to 50% of the days of prior days range. This was an urgency trade if I've ever seen one. And if you are a new viewer and you're wondering what we mean when we say urgency, here's the opening 30-minute candle from last night. And here's a case. So I'm going to frame out 2 candles. I'm going to frame out the Globex open. I'm going to frame out the Asia session open. That is 8 p.m. Eastern time. right? So one of the things we've been talking about is waiting for the Shanghai session to open before looking at the metals because that's when we know the volume is going to come in. And I think in this case, could it have worked out if you traded the Globex open? It could have. This is a tough one though, Coach Paul. Do you trade the Globex open when it shows up, or do you just go with the rule of only trading Shanghai?
Trade the Globex if it has urgency.
There you go.
Urgency to me within the first 5 candles. If not, there's nothing. There is no urgency, and I just stopped looking. Um, but in this case, I mean, like you just said, if this was urgency on a small range, second bar, we VWAP closed over. The Comex, I mean, Globex, Shanghai. Anytime I see that, I'm taking that trade if I can afford it. And you got to make sure you can afford to trade silver.
Seriously.
Um, there's, I think, to be honest, $1,000 even on a micro is about what the average risk right now.
Yeah, I think
So
at a minimum.
can't wait till I have the 100 ounce.
Yeah.
Now, what I would ask them
September
is
9th. September 9th, the CME is putting out a
February 9th.
oh sorry, February 9th. February 9th. The CME is putting out that product. But even if you waited for Shanghai today, we had, it's a tough one. Again, if you're looking at the 30-minute and you're waiting for that 30-minute candle to close, you're going to have to sit through a little bit of drawdown. And this is where we're saying, you kind of have to accept some risk in this market or trade it on a shorter time frame, on a lower time frame, right? If I look at a 3-minute off of that Shanghai open, it's going to reduce, and we talked about this yesterday, it's going to reduce the risk. It may also reduce the probability of the trade working out, maybe, right? But here's the 3-minute. I really like this trade, right? We close here. It's definitely less risk than waiting for that 30-minute candle to close. And in a market that's as volatile as silver, I think whatever you can do if you're going to trade it, to eliminate some of the risk, the better. This is not a market to play around with right now.
That's a great abstraction. Taking a smaller, you see that breakout, and you say, "Well, I can't risk that whole candle." Right? Take a 3-minute, 5-minute, even a 1-minute, and see if you can get it there.
Yep.
But and this goes back to the point is discipline. You do that, you have to be disciplined. In other words, if you don't put the stop in, you're not disciplined.
Right.
You're still they haven't accepted the risk. You want to make the money, but you don't want to take the risk. Learn that. That's a principle. And I like what you did there. You make an abstraction. Okay, it's friendly. What time frame can I afford to do it? Am I willing to take that risk? Knowing this too, in a smaller time frame, it might be small risk, but there's a higher chance of getting stopped out. But in silver, that makes a lot of sense right now. And once again, I can't wait for the 100 ounce, the
Yeah.
nano. I'll call it the nano. But I will ask the Merc: is it 1/10 the fees?
1/10 the fees? Probably not. Maybe.
That
Probably
never
not.
happened. No,
Probably
they didn't do that when they
probably
put the
not.
micro Nasdaq. I was at a conference with them when I asked them. The guy looked at me with a none too pleasing look. The guy from the Merc. I'm like, really? But hey, it's the way it is.
New all-time high in the silver contract, $93.56, $93.56. We are $7.25 away from $100 in silver. Tommy has a question here. When they do that for silver, releasing the contract in February, 100-ounce contract, do you think we'll see the same amount of volume going forward because money drives money, correct? We'll see. We will see. It's a new product. With the popularity that silver has right now, actually, let's take a look. Has the daily volume been increasing? It has been. Uh, so yeah, what do you think there, Coach Paul? Where there, CME is going to introduce a new contract. Are we going to see the volume split, right? Because we already have the big contract, we have a micro, and now we're getting a smaller one. Um, you could see
Um,
the volume for the micro increasing here.
well, you'll definitely the micro, the nano, the 100 ounce will have huge volume. It's just a matter of function. More people will be able to afford to trade it,
Right.
and it's a smaller contract. It will now the overall volume, as in the big contract, it won't affect that. That the commercials will still be trading that. And a coach Hoop says here that it becomes a liquidity question when bigger players don't want to get out. I think that's already, but that's there already. Um, so yeah, but it'll bring in volume, but that volume's going. That's why I asked, and I'm serious about it. Is it's going to be more expensive to trade in fees. If the fee is the same and the contract is 1/10 of the old micro, your fees just went up
Oh yeah. 10x, 5x,
10x.
10x. Yeah.
Five, I would say, let's say they cut it in half, which they might not.
Right.
But that's to me, I don't blame the Merc for doing it, but don't feel you can trade more. It's
Yeah.
just going to be a
It's going
better
to cost you more.
fit for most portfolios.
Right.
So yeah,
Looking
but
at the
the
volume.
volume will go up.
Looking at the volume here, we have the micro already trading about 3 times the big contract. Today, it traded about 3 times the big contract. 465,000 contracts traded in the micro, 195,000 traded in the big contract today. Um, and again, you can see right around that time that the micro started to pick up volume. It's not a coincidence that once silver started to trade above $60, we started to see more volume in the micro than we did in the big contract. Uh, Things cost money, and as these
And
prices continue to go up, yeah,
and also, you can look at that a notional value of the contracts. What I mean by that is the value of a regular contract, a mini, and a nano. The notional, we'll see, but definitely it's a great move. Been wanting this for a long time. It's coming. I would like to see the CME fees at 1/10. Maybe you don't worry, I do. Um, but it's definitely gonna be a banger.
sure. Uh, Speaking of managing risk, trading a specific contract, let's get to a question before we get to crude oil. Ugendra had a question earlier. How do you handle losses and keep an XFA for a longer time? Uh, Start with the second part of that question first. Keeping an XFA for a longer time, you have to have a risk allotment that is going to allow you to keep the XFA for a longer time. A lot of times what happens is, especially early on, someone will get an XFA, say it's a 150K XFA, you start off with a $4,500 balance, you get a brand new XFA, maybe you just passed your combine, right? And jumping into this XFA, you're excited, I'm gonna throw on 3 lots and make a bunch of money right now and be able to take a payout from this account. And you don't consider the downside at all, and you lose $3,000 in a day. Uh, that makes it hard to keep an account for a very long time, starting in that big of a hole. So having early on reasonable loss limits and not trading huge size to try to sprint out of the gate, because your question inherently asks, how do I keep an account for a longer amount of time? You got to keep money in the account in order to do that. So I want to ask a question back to you, Ugendra, if you're listening. How when you pass a combine, how many days is it normally taking you to pass that combine? Um, and Coach Paul, while we're answering that, just anything you want to mention there, as we are seeing pretty sell off a
Yeah.
little bit here.
Okay. Two things on the XFA. What happens? Because it's for reals now, so to speak. And what what happens? I don't know. In my case is in a lot of the traders I've seen. When you get there, what's the first thing you don't want to do?
Take a loss.
Lose money. So we talked a little bit about this yesterday, loss avoidance. And that doesn't mean it means you don't okay, what it really means is you're not taking good losses because you don't want to lose money in it. So following the principles of number one principle is to survive. And to survive, you have to manage the account balance. That's first and foremost. So you get back in an XFA, don't you have to have a reasonable daily loss limit because you have to build the equity.
This might be doing it here. Headline coming out here. We're going to talk about oil in just a second here, but initial reports of possible explosions in the Iranian capital of Tehran. That just came out a minute ago, where we saw some of the volatility in the market there. So that could be it. Let's take a look at crude oil. Crude oil popping here as well. Say, pray for peace, pray for everyone's safety. If we have traders in region here, crude oil popped really hard on that, up about $6. And initial reports of possible explosions in the Iranian capital of Tehran. But yeah, Ugendra, if you're in the chat, if you can answer that question, how many days is it normally taking you to pass a combine, right? You know, you ask the question of how can I keep an account longer? Back to the gym analogy, right? How much have you trained to keep an account longer? You may be asking yourself to do something right now that you've never done before. And if it's 2 days, and we said this before, but if it takes at a minimum 5 days to get to a payout, and you are celebrating passing combines in 2, you're doing yourself a disservice, if whether you realize it or not, because you're not even conditioned to know what it's like to keep a Topstep account for at a minimum 5 days, right? So what's the best way to learn how to keep an account longer? Force yourself to keep the account longer. But a lot of people want to get to that. But how many people, pass a combine in 2 days and never get it to a payout because, like Coach Paul just said, that first loss feels like a catastrophe, right? And I don't want to take it. Even if I've done it. I've had an XFA where I run it up to a certain balance in 4 days, and then that 5th day, like I'm not conditioned to do this. So then I start taking some risk or getting in an uncomfortable space. Force yourself into that uncomfortable space early, by just holding an account longer, naturally. But let's look at what's that white line there? Let's look at crude oil here on the daily. Coach Paul, what are we saying?
I'm trying to buy the crude here. So
Oh, okay. Go ahead. Go ahead. I'll
um,
talk it. Go ahead. Place a trade.
go ahead. Yeah.
We got crude oil. And we heard Coach Paul say this. Crude oil is potentially going to be the market of 2026, and I think early on, it is a contender for that. Today in crude, we had some pretty crazy volatility. We know with what's going on in Iran and Venezuela, it has the potential to move these markets around. 5% move high to low in crude oil today, and we are seeing some more volatility come into these markets. On the daily, we are above the 200 moving average on the daily. We talked about this yesterday. Traded above it yesterday, came down, looked below it, tagged that what was the low here of the day, 59.19, and right back above it here. And unfortunately, anytime there's wartime and things like that, that's when crude oil gets interesting. And that's kind of what we're seeing here. And we take a look at last night's open. a decent sell off in the overnight session. We probably start looking at crude oil right around that London open. Here's the London open here, right around 60.50. A lot of back and forth action. And then I think this major sell off that we saw, so we just see crude oil kind of grinding up here. The president made an announcement about Iran late in the day. We saw this major sell off that came in here today, right back down to the 200 moving average, which we just bounced off of. This is a market to me that's in an uptrend. Was a tough trade in the middle of the day. I know the house account did not take the opening range trade today, and I think it was a good no trade. But this is starting to be a headline-driven market, which we've known crude oil to be. But we're starting to see some headlines that cause some major volatility in this market. Right, this is a 30-minute candle that is a $2.58 move. That's twice the daily ATR in one 30-minute candle. And really, most of that was in about 9 minutes or so. So if you're trading crude oil, just like silver, we may start to see the volatility pick up here. And we say it all the time when we start this session. Our job as traders is to identify opportunity. Crude oil is starting to present some pretty nice opportunities here. For me, because the market more often than not looks like this, I think the way I'll plan on trading crude is seeing the volatility come in and then trading the way we've talked about, trading news events every time. And it makes it kind of hard when, you get a 3-minute candle that is $1.50. But that's to me, that's the approach if I'm going to day trade crude. Because otherwise it's just chopping around and waiting for a headline. We don't know where that headline is going to take the market. But once we see the volatility start to come in, it could present some opportunities. Anything else you want to say on crude oil, Coach Paul?
Yeah, but if we go back to the half hour, where do we usually look for the beginning of crude?
London session open, which is right here.
Is that the half hour? Yeah. So that half hour, we anchor a VWAP to it, and when we've seen we're above the. Yesterday we closed above the 200 moving average for the first time in 3 months.
Yeah,
And we've been talking about this is picking up velocity. So that London Open is really important. So what we saw some urgency out of London, and it rallied. I don't know what $2 in an hour and a half.
Yeah, here. Yeah, this is about
Yeah,
about $1.70 move. Yeah, that's a nice move.
yeah. And this is much like gold. If we take the volume profile, it accepted. It accepted it, and what did we do? We traded sideways, had that fake out, had a news quote event, broke right back to the 200 as we were just before we came on. But still, it's almost like a reprieve for shorts. Like, oh, please, thank God, I can buy them cheaper. What do? We go right back up. But tonight I'll be watching a London. Um, it, it, to me, that's still the energy trading capital.
Yeah.
We see this all the time. We've seen it. How long we've been doing this? How long have we been? This is over 2 years, right?
Over 2 years we've been doing at the buzzer. Absolutely. Over 2 years. And we see a lot of the same patterns, right? And that's what the markets are. They're pattern recognition. Our job as traders is to try to identify those patterns in real time so we can take advantage of them. And crude oil is a nice one. Who just said this? DigiCap just said maybe a wild open for Globex. I agree. It could get pretty interesting here. In all the markets we trade, really. If I'm going to be watching the Globex Open, it's probably going to be either crude oil or the metals. But I'm also going to be conscious of the fact that this, it's the full court press, right, Coach Paul? Full court press is intended to speed up, and we're talking basketball here for a second. But as a defense, I play a full court press because I want the offense that I'm playing against to speed up. I'm going to be aware of the fact that just because a headline comes out that has the potential to move the markets, if the markets don't move, I can't try to force a decision in a market that's not moving. Perfect example. When what happened with Venezuela, right? When the U.S. captured the Venezuelan president, a a couple weeks ago, what did the market expect? Crude oil to just sell off. Crude oil is up $10 almost from that point, or $8 from that point, right? So I can expect something to happen, but what's actually happening is way more important than what I expect or what I think should be happening based on a headline. And that's why we say take a technical approach to a fundamentally driven, headline driven markets, because the charts are what we get paid for. Analyzing the charts are what we get paid for. Jib says all due respect, but it's a lot more than pattern recognition. Maybe. That's my opinion. Markets are pattern recognition and not just patterns on the charts. When I say pattern recognition, the most important patterns are probably the patterns that you exhibit yourself as a trader, right?
Oh,
When you get a catalyst, how do you respond to it?
I would throw this out too, Coach. I think that's more important.
Yeah. Oh, yeah.
Ask yourself as a trader how many times you see a pattern.
Yep.
Either you execute it wrong, you over leverage it, you under leverage it, you don't take it. That type that psychology, that mindset is more important because we see it all the time. Was a perfect setup and I fucked it up.
Yep. Oh, yeah.
So
Done that a lot of times.
who out there hasn't?
Right.
That's part of the learning. That's why you're here to learn. Especially if you're in a combine, even an XFA, you're here to learn. It's all right. I mean, it's a cheap way to learn. But that mindset, that ability to execute a plan is more important. So that pattern, you have to analyze that and own it. Be accountable to that.
100%.
And it's hard to be accountable to yourself. It's because your ego gets out in front of it. And you're like, oh, you hear these people will always give excuses. We're human. Oh, well,
Yeah. I did it
no.
because of this. I did it because of that. And it's just like, you made a choice there. Made a choice there. The
Right.
market didn't force you to do anything. Everything, to me, that's the coolest thing about trading. Everything you do, 99% of what you do here, 99.5% is your decisions. The result of your decisions. To me, that's the coolest thing in the world. Every once in a while, there's going to be a catalyst. Is like, hey, there's nothing I can do about that. But even in that, I get to choose how much I'm going to risk if a random headline comes out and destroys my trade. And the sooner you accept that, sooner you can look at the patterns that actually need to be adjusted, which is to me is a kind of a cool thing. I have a fresh 150 XFA. What should I set my loss limit to in the risk settings? That is from Jazzy. That is a subjective question. Coach Paul, you want to give your suggestion there?
I'll do what I do. Set the daily loss limit to no more than 12%. Might even start at 10%
Of your drawdown. So if you
of
have
your drawdown.
a $4,500 account, multiply that by 0.12, which would be 12%, no more than $540 for your daily loss limit. And if the suggestion is start even lower than that, no more than $450 for a daily loss limit. That gives you, and that should scale, right? And it should scale based on a percentage, not a hard number. Let's say you lose today. Now you go from 4,500 to 42. What's 4,500 minus 450? 4050. Now that drawdown should go to $450. Or sorry, $405.
$400.
$400, right? And scale as you go, and not scale the other way, right? One of the things I told you guys that I'm going to try to do with this, and not try to do that, I am going to do with this XFA is as the balance grows, I'm going to scale that percentage the other way, right? I don't want to continue. If I get this balance to 100K, I don't want to continue risking 10% every day. Maybe I'll be somewhere closer to 7% or 6%. And the dollar numbers are going to look bigger, but as a function of the account, when we continue to grow it, I want to try to continue to push. So I'm going to be taking bigger trades. But scaling that percentage the other way. I have a habit of
Great
trying to make
question.
I have a habit of trying to make my losses back and end up in even more drawdown.
You do?
No, I've done that. Oh yeah, I still
Oh,
do.
we
Hey,
all do have done that.
we all do it. Hey, speaking of knowing your patterns, right? That is a pattern that Jay has. Uh, if I take some early losses and I don't lock myself out, I am susceptible to try to go chase those losses. I don't want to act like that's not a reality. Oh, I'm this professional trader and I've been doing this for 14 years. I don't have that problem anymore. Anybody who tells you that is a liar. It is everyone is susceptible to it. It's the way you see hedge funds lose billions of dollars, right? These markets are driven on emotion, and anyone, full of crap, right, Coach? Markets are big enough to take anybody's money. So I'm susceptible to it as well, and that's why we need to take the steps that we have to take in order to not do those. So, Jazzy, if that's your case, if you have that habit, go into your settings, set a personal daily loss limit. For you want to do 10% of that account, you're going to set it to $450. You're going to say liquidate and block. You're going to save that. And then you're going to lock your risk settings for the day. Do that as soon as the markets open at 6 p.m. Eastern time. Then you don't even have to worry about it, right? Don't even give yourself the option for that to be the case. And I'm going to tell you right now, if you hit $450 losing day, you're not going to be happy. But it'll be good for you. It's like your parents telling you to eat vegetables. You're not going to like them, but they're good for you. It's going to suck, but it's helping you accept a losing day as a trader and coming back the next day.
I'll add one thing on that. Also, it's a quote. I just found it. It was I have read a while ago, and I keep it in my quotes. Is risk defines behavior.
Yep.
Behavior defines outcome.
There you go.
So in that XFA, you start off. The risk is that you're going to blow it up.
Yeah.
To keep that to survive is you have to have a reasonable daily loss limit. And here you're locked out. Let's set it up or you're locked out. Because that behavior, disciplined behaviors, you have to block it out. Because you have to survive. And it's a good practice. Not even a practice, it's a principle.
Yeah.
So you can break rules, but you can't break principle.
Yeah. Jazzy has it. Jazzy says silver is always the culprit too. Jazzy, this is just my opinion. This is not financial advice. We just gave you a suggestion for a drawdown limit in your 150K XFA of about $450 to $540. Don't trade that shit.
Keeping it real, coach.
Don't trade that. Don't trade silver. If that's the drawdown limit, that's my suggestion. Now you could do whatever you want. I would not be trading silver with that tight of a loss limit. And you can make some money here, but my suggestion would be not to trade it. But hey, we can only give suggestions here. And Jib, we appreciate you being here as well. All right, Coach Paul. Anything else you want to talk about? We have micro Bitcoin moving today as well. We're almost near 100,000.
Daily.
Yeah.
What did we close? This is short covering. Now we see the 20-day moving average. We closed above it yesterday. So more short covering. I'd like to see the 20 cross. It's just not it's not clear yet as far as being flat out bullish for me. We're still under the 200, but this is definitely short covering. Why? We've been under that 20-day moving average for since October, I think.
Yep.
We closed above it.
Under the 50, under the 50.
Oh, the purple's the 50. Yeah, I'm sorry. So definitely short covering. It kind of reminds me of crude.
It does. It does. We
It had
sat
a
in
nice
this
base.
Yeah, we sat in this consolidation for a long time, right? It was, the market was trying to figure out what to do with 85,000s. Market was trying to figure out what to do with 85,000 there, and yeah, found a base there. Go
Yeah,
ahead, Coach
it
Paul.
had a nice base. Um, like I said, that structure tells me it's short covering for aggressiveness is to be buying it hard. Um, I'd look to buy a dip, but it's great base. Let's take a look at the weekly real quick. Hook, there's the base. So we're above that high. If we can close on it, this should could begin to pick up some momentum.
Looking interesting here for
So
sure.
yeah,
One of our
what is
big,
it? Buy in December, sell in.
I think it's buy in January, sell in October. Buy in
Okay,
January, sell in October. It is looking pretty healthy so far to start the year here in micro Bitcoin. Of course, 100,000 is going to be an interesting level to get through. We could be there tomorrow. One of our biggest percentage movers on the day today. And we are at time. We are at time there. Another great session as always. Let's just check the calendar really quick. Again, some unplanned headlines coming out. But as far as planned numbers, we got jobless claims tomorrow. We're starting to see some of the bank earnings. So if anyone's trading the Dow, bank earnings have the potential to move the Dow. Not saying that, you should be, if you want to look at the bank earnings, but we have seen some interesting movement in the Dow recently. But we got jobless claims tomorrow, and it's about it as far as heavy numbers go for the week. So 2 more days to go in the week. Hopefully everybody's having a good week. Hopefully anything we're doing here is helping you with your trading journey. Coach Paul, anything you want to say before we get out of here?
once again, we had some great discussions today. Bottom line is plan your trade your plan.
There it is. There it
There it is.
is. Have a plan, trade that plan. Um, Even if that plan is, hey, this day trading thing is not for me, that could be your plan. That could be in your plan. That could be in your analysis of what you've done here. And I think that is okay to say. Saying that as somebody who day trades almost every day. If you accept that it's not for you, that is a true reality of this business, and that is okay to say. Uh, Before you admit that, I think give yourself the best opportunity. Right? If you're just coin flipping accounts and then saying, "Hey, this doesn't work," well, yeah, that doesn't work for most people. But if you're actually giving yourself a shot and you say, "Hey, you know what? Not for me," that's okay. That's okay to do. All right. But we appreciate you all being here. As always, we got Coach Hoop doing a class in Discord at 6 p.m. Eastern time. And then after that, Coach Rain, Coach Vince, 7 and 8 p.m. Eastern times. Coach Dakota with Slow Markets tonight. I will be joining him 8:30 Eastern. Then we got Aaron with the London Open, D with the Euro Trade, and we'll be back for the opening call tomorrow, 8:15 Eastern time. Trade well, everybody. Manage your risk. Have a plan, and we'll see you all tomorrow.